Pankaj, good morning. What are you telling your clients to do? Should they use the strength to their advantage to clean up stocks?
Hi, good morning, Nikunj. Yes, I think our sense is that some bit of amount of cash is not a bad idea at current levels. Because see, what we are still not factoring in the is the global policy paralysis as uncertainty regarding global growth and inflation remains. Because top two economies are engaged in a tariff war. And our sense is that, so for example, in our case itself, it is very difficult for us to take a call on safeguard duty for a sector like steel, since we don't know the impact it will have on the overall Chinese production. So, and also we are not even clear in terms of tariff on EU and other countries. While domestically things have been good, our sense is that next 2 years you'll see 14% kind of a CAGR growth in earnings. There is a good potential that we'll have a relative advantage in terms of tariff. Crude is already down. So domestic macros are definitely supporting, but I think global uncertainty still persists, and which is why it is possible that the markets can sort of correct further. Historically, since 2006, we have seen that the average correction in mid cap and Nifty has been about 27%, lasting for a period of about 7 odd months. So some bit of volatility I will not rule out, and which is why a bit of a cash at current levels is not a bad idea.
Where do you think there is opportunity still after? After this 2-3 day run up. The near term. Where do you think there are some bargains there?
So I think, Nikunj, banking is clearly one sector where things have been relatively quite better. The RBI has been on a positive surprise, especially with regards to the liquidity side. So banking is one sector which looks attractive to us, and I think valuation-wise also we don't see much of a challenge. So that is one space which we are liking. We are liking both Axis Bank, Kotak, and HDFC Bank, and even some of the NBFCs like say, Bajaj Finance and Shriram Finance. I think steel is still a sort of a question mark at this point in time, though structurally we are positive on it. The other thing is that capital goods have corrected significantly. So we have started to like a company like, say, for example, ABB. It's trading at about 46 times on a forward basis. Even when we did not have the capex cycle, say, between 2010 to 2020, I think these stocks were used to trade at about 40 times forward. So from that perspective, even the capital goods stock post corrections are looking attractive.
Yeah, that's quite interesting. Kunal, we've talked about banks and as to how, this is the go-to pocket. But within banks, would you move down the line now from an Axis, ICICI Bank, HDFC, Kotak, etc.?
Yeah, I think and there are better options which are also emerging in terms of the data points. For example, we're discussing, say, for example, Bandhan Bank, a stock which has been beaten down significantly. That stock has started to show signs of relative strength outperformance. Then from the PSU banking name, you've seen very good price action coming from SBI, a stock which was, I think, at sub 700 mark or 675, 680 thereabouts, just about a couple of days back towards 720, 730 mark plus where it's closed yesterday. It's almost come back to the last 3 weeks high for SBI, so that's a very strong comeback. You're seeing very good risk reward emerging into the other PSU banking names like Bank of Baroda, PNB, etc. So I would believe that the markets, especially for the banking index, it's time that we look out for stocks beyond the large cap names. And I think the added advantage to that would be that if the market gets into a bit of a, I would say, a slight high risk appetite mode or into a short covering mode, it's going to be more advantageous to the stocks which have been huge underperformers even in the banking space.
Okay. Pankaj, if the liquidity increases, who would be the biggest disproportionate beneficiary? Go down the line, like Kunal said and you've discussed, MFI dominated banks or retail dominated banks?
I think MFI picture, Nikunj, is still not very clear. It is possible that we could see a quarter or probably 2 quarters of pain ahead. So from that perspective, unsecured lenders like say Bajaj Finance or Shriram Finance, I think are relatively attractive to us. We would still not go down to tier 2 NBFCs at this point in time.
Right, okay. Let's look at a bunch of other names which, actually held out yesterday. You did have, buying come in on an IIFL that moved up about almost 11%. You had an Adani Green, Adani Energy Solutions, Coforge, ATGL. These were all names which propped up quite nicely. That was not quite the case though with BSE. That fell about 3.5%. You saw some ebbing off in an IndusInd, in a Bajaj Finance as well. That was also down about almost 3 odd percent. And then of course you had an M&M, Tata Steel, NTPC, Power Grid. They all jumped up very, very significantly. Naresh, what's the thought on some of these high beta names, the Adani Group entities, for instance? Do you think they're likely to make a comeback now if the market were to recover from here?
Yeah, ideally they should, given that if we look at their prices, so Adani Enterprises today is at the same price where it was in May 2023. Even after the big gap down, it had formed a base around 1900, 2000, and the recent lows are closer to 2050, 2100. So we may get back into the same range. So Adani Enterprises, which is the main stock in terms of tracking, this made a bottom around 2015 November also and went back to 2550, 2600. So we could be forming a range bound move in Adani Enterprises as well as Adani Green, Adani Energy. A lot of these stocks are back to that big gap down of Feb 2023, almost there. So in this case, it makes a clear case for a bounce back, but it may not turn into a big uptrend as such. So a bounce back of 10 to 20% in a lot of these names would be normal.
I'm just, scanning through my list. Just hang on. 1 minute, please. Okay, paper's not there. Yesterday's gainers. And we did see evidence of some comeback in machinery stocks, capex stocks, infra names. Kunal, has the tide turned there?
I think yes. I think there would be some stocks within that space. For example, from the infra space, we see specifically if I look at the cap good names, for example, there was three prominent names which are beaten down significantly. Whether it's ABB, Siemens, Cummins, or even L&T for that extent. Relatively, yes, L&T was quite strong, but then as compared to the other three peers. But then I think ABB and Siemens is where I would believe that there should be a very strong evidence of short covering which could come by. What's actually happening is that many of these stocks, whether it's from the infra space, etc., these stocks are forming a very coherent kind of a pattern on the charts, and we are looking at evidence of triple RSI divergence setup. By that, it means or it indicates that the prices over the last 1 month have made 3 subsequent lows on a relative basis, and the RSIs, for example, for these stocks have actually made a higher low for themselves. That's a classical sign of a short to medium term bottom in place, and whenever we see these kind of setups, the risk reward starts to look very attractive, and we are looking at a pickup of at least 5% to 15% kind of a swing from their immediate swing lows.
Okay, that's that on Capcos. But the one segment really to look out for today is going to be the globally linked auto plays. So look out for what a Sona BLW, what a Tata Motors and Bharat Forge actually may be up to, because the commentary from Trump on autos is very, very interesting. He's saying that he's giving 1 month tariff exemption to US automakers whose vehicles comply with US-Mexico-Canada agreement, and that US wants zero tariffs on car imports in India in trade deals. So that in a sense hints at paving the way for Tesla's entry into India. Pankaj, just wanted your own sense on what Tesla's entry into India, if all gets cleared, actually means for the incumbents from within the passenger vehicle segment, within that segment. Your namely Tata Motors, M&M and a Hyundai as well.
So our sense is that when you look at the cheapest price product from Tesla, I think the overall costing is going to be in excess of 40 lakhs. So from that perspective, it is not going to compete with the listed players. Probably it will have, or it is going to compete with the likes of German manufacturers, especially BMW, Mercedes, and others. And so we don't see that as a threat. I think what is doing well in auto is again some of these players, like say for example Mahindra and Mahindra, YTD their sales are up about 20 odd percent. Similarly, something like say TVS at about 13 odd percent, or Eicher, which is sort of doing well, especially in the premium leg of the two-wheeler segment. So from that perspective, one needs to be very selective in auto because a lot of these two-wheeler names are struggling also because of the financing issue. So from that perspective, one needs to be very selective in auto.
Okay, be selective in auto. Kunal, what are the chart readings? M&M, which eased off a little bit from the 52-week peaks, and Tata Motors, which has really got battered, in this current market sell-off.
No, I think it has to be a blend of both, because there comes a point where the markets, get skewed to one particular direction, and then I think at that point of time, going contra makes a lot of sense into these kind of spaces. For example, from the auto pack, you had Hero MotoCorp, Bajaj Auto, and Tata Motors. These were the three names which are beaten down significantly, almost 7 or 8 consecutive months, where we've seen the stocks correcting by 40-45%, and that too in a very consistent kind of a manner. So when you see such kind of a sharp selling, there's bound to be a point where these stocks, there's an inflection point for these stocks where the risk reward starts to look very attractive. So for traders who are looking at a trading pop 5%, 10% kind of a swing into these names, I think betting on these stocks would make a lot of sense, given that the markets are finding its risk appetite back again. And then the second part of the trade is that when the market comes back into a stability post a short covering move, is that we look out for stocks which have been more strong relatively, both in the market correction as well as in the jump up or in the rise towards the market rally. So I think in that sense, M&M could be the other stock which would look attractive. The stock is still trading below its, or just marginally below its longer term averages. So even if we expect the stock to normalize or come back towards the previous mean reversion mode, we could be looking at least the 3,000 plus levels for the stock in the near term.
Okay, that's that on autos. Have an exposure to, all names in small quantities. That's what Kunal is advising, because right now the positioning is extremely skewed and bearish towards Tata Motors vis-a-vis M&M. Some of the other names, look out for what OMCs, paints, aviation, as well as tire stocks would do, given their sensitivity to crude and the fact that crude has now fallen to 68 levels, hitting a 3-year low now. Pankaj, your thoughts, and let's talk about paints in specific, because there the entire shake-off happened as soon as Birla entered the market. You saw the big one and the largest in the pie, Asian Paints, start to correct from there. Do you think this trigger, the fact that crude has seen such a significant cool-off, could act perhaps as a leg up to Asian Paints to bottom out?
I think we are still some time away from paint stocks bottoming out. We've seen players like Asian Paints, so the margin profile coming down from say 20% plus kind of a level to about 15, 16 odd. And I think the industry is still going to sort of compete on prices, especially, for example, I think Birla is still offering both price and volume discounts. So from that perspective, while crude decline is definitely a positive, but these benefits are not going to be retained by the existing paint players. And I think they are still in more of a type correction, less of a price correction is what I would expect.
Okay, not quite there when it comes to paints as a segment bottoming out. Naresh, what's your reading on the chart though? And let's talk about Asian Paints specifically. You think it's anywhere close to a bottom?
So tough to call if it's a bottom, but it looks like a place for a bounce back, because the stock has corrected recently from 3,400 all the way down to 2,100. Now, pre-COVID, the stock used to trade at 1,900 and 1,850 odd levels for most of 2019. So the stock has already given up all the gains post-COVID. And in the near term, we've seen crude prices also go down, which is generally considered a positive. It's just that the trend is very weak, but a bounce back towards 2,250 to 2,350 would be normal. But it could go into a consolidation after that. So I don't expect it to make a sharp move as such, but a new range between 2,100 to 2,350, at least for the short term.
Pankaj, if not via paints, how is it that you will play this crude cool-off story? Would it be via aviation, lubricant manufacturers, tire, cement, or even specialty chemicals for that matter?
I think, crude being down again is not a factor which is going to sort of determine in terms of the kind of overall top line growth we would expect. So typically in consumption, we are liking only two themes, which is one is the hotels and the hospitals. I think in hotels, the overall ARPOB growth was about 20% for the industry. We are still expecting a good double-digit kind of a growth for this year. I think till the time people mess up with their lifestyle, I think hospitals will continue to sort of do well. China was one of our pick for the new year. And I think besides that, what we are also liking is global healthcare. So that is another company which we feel should do well besides Apollo Hospital. So I think from a consumption theme perspective, these two segments or even the MNC pharma stocks are relatively attractive. At least there you will see a better growth in terms of both pricing as well as volume growth. So from that perspective, I think probably these 2-3 segments is what is looking better in a consumption theme.
All right. Hi, Pankaj. Good morning. This is Shrishti also joining in. Wanted to have your take on Reliance because that stock has been definitely underperforming the Nifty returns. On a one-year basis, I was seeing that the stock is down more than 20%. Do you believe, is this a good time to now look into Reliance given the underperformance and now that the stock is near to its 52-week low as well? Do you find the valuations comforting at these levels?
So yes, valuations are definitely comforting, but I think when you look at Reliance, I think the only piece which is doing well is the Geo. And our sense is that every 2 years you see a price hike, so probably one more round of price hike is definitely on the cards. The challenge is on the retail side, except for end of the season sale, we really do not see much of a pickup. And on the oil and gas business, see the GRMs have yet not meaningfully improved, and which is where the challenge lies. And we have seen that the FIs have sold maximum in the oil and gas sector. If you sort of look at the spread of say Nifty 200, so I think the FIs are still sort of selling. So which is why we are still not hopeful of a very good bounce in Reliance at this point in time.
Okay, that's the take coming in on Reliance, fairly beaten down at 1175 levels. Kunal, what's the reading on the charts? Because, you know, it's seen quite a bit of correction, 20.5% for a index heavyweight like Reliance.
Yeah, that's a very steep correction, and especially I think at a point where, you know, it was not as if that the stock was into a huge outperforming zone as it is since 2023-24. Yes, there was a phase where the stock rallied from 1400 levels to 1500 thereabouts, 1550 thereabouts in terms of the price adjusted value. But then post that, I think we've actually seen the stock just about negate the rally which it had seen in the mid part of 2024, and that I believe could be a concerning point for the stock price trend, because this generally indicates that the stock is settling into a huge trading band for itself, and this is almost like a 300 to 350 point band for Reliance Industries, where 1100, 1200 mark could act as a support zone, and then you're looking at a resistance point just about close to that 1400 to 1500 mark for the stock. So which means that what we are looking out for is at a point where when the stock comes into an extreme lower end of the price trajectory as well as this band, then it makes sense to go for a contra bound to the stock price, and then expecting the stock to come back into the higher bands of 1300 to 1400 range. But then the major part of the trend pickup that goes away when stocks get into this major consolidation band, and then generally we expect that such consolidations they last for at least a couple of years, if not more.
All right, let's watch out for Reliance as well. But since we were talking about some of the crude beneficiaries today, all eyes will be on Castrol India as well, as some of the reports are suggesting that Saudi Aramco is set to mull for BP's Castrol lubricant asset. And Kunal, what is your take on this particular counter? Because in the past 1 month or so, I was just checking the charts. The stock is up around 13%, didn't participate much in the recent fall. Which are the levels that one should be watching out for?
Yeah, I'm very bullish on Castrol, and in fact, it's been one of the recommendations which I had given a few weeks back, especially at a point when there are two important parts for Castrol. So there was a relative strength scale for the stock with respect to the overall market as well as the mid cap end. There was a point when the stock moved up from I think sub 200 levels, 175 thereabouts to 200 plus mark on the back of some very strong volumes. And the second, the more intriguing part is that the stock completing a bullish flag formation. I think at 220 levels thereabout, the stock has also confirmed a breakout above its 200-day moving averages. Now, when you see such kind of patterns coinciding for the stock prices where it starts to go relatively into a strong mode, and then breakouts happening, volumes moving up hard, the stock breaking past above the indicators, that generally indicates that the stock is looking at a reset of a major trend for itself. I would actually look out for much higher targets for Castrol on the upside, So my sense is that the stock should come back towards at least a 260 to 280 plus mode, say potentially over the next 3 to 6 months.
Okay, that's the take coming in on Castrol right now. Looking at some of the other plays, LIC Housing Finance, look out for what that stock as well does in trade, because remember they've approved the borrowing budget of about almost 1.25 lakh crore rupees for FY25 to 26. There's Zydus Life as well, wherein they've received the final approval for US FDA for the dasatinib tablets as well. So look out for what that stock too as well is going to do in trade. And of course, banks and autos are going to be the key on everyone's radar today. Banks, because RBI is looking to inject that near about 2 lakh crore rupees of liquidity via OMO purchase auctions. So that's going to be one key sector to look out for today. And other than that, of course, the Tesla sensitives, if I can call them that, your Tata Motors as well as Sona BLW, Bharat Forge, I would say look out for a Hyundai and M&M as well in trade. The GIFT Nifty, it's picked up a little bit. It's almost now closing in on the 22,500 print. Pankaj, before we let you go, you've given us your bullish list, but what is it that you would still avoid in this market?
So I think in general, I would not suggest a very aggressive buying at current levels, but I think structurally we have been liking some of the themes. So for example, CAPEX as a theme looks attractive to us. So capital goods, infrastructure, cement players, BFSI looks attractive to us. And like I said, in consumption, it's more of hotels and hospitals which look attractive. And selectively, one can be positive in autos. So that is what, in fact, in the small cap index, also we have seen that 1 year forward, October around the index used to trade at 21 times. We have already seen 24% kind of a correction. So valuations are okay at about 17 times. A bit of a selective exposure even in small caps can be taken. But I think the volatility is still going to persist for a month or two. That is what we would expect.
All right, Pankaj, so we will watch out for those themes. But with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us this morning.
Thank you so
Moving
much.
on.
If you like this video, then like, share and subscribe to ET Now.